This is Market Week Live for January 17th, 2025. Information and support for traders and investors. Welcome, everybody who's coming into the room, and all of you there that are watching this out in YouTube, and of course, all of you that are watching a replay on that. Really glad to have you here. What we're going to do in this show is we're going to have our express round coming up where we're going to answer your questions. That is for level 1 to 4 members that are in our Zoom feed right now. So you can add your questions to the Q&A right now. The floor will be yours. And the topics we're going to answer, of course, are things about our services, trade planning, the way we approach it, chart analysis, other trading issues. You have issues about trading? I'd be glad to answer it because remember, I've been a trading coach for over 2 decades. Matt is going to look at our services. You're going to see the amazing depth of our content, and he's going to show you our level 3 special. This is amazing. The lowest price we ever offer it. It's 50% off for 1 month, and it's non-recurring. So this is your chance to test our upper level products, our services, and then in a month, it won't be renewed. You'll be able to decide if you want to stay on. And I'm going to give you my stock market analysis, some of the evidence, probabilistic projections, and price and time. And you'll see our advanced indicators and applications at work. So this is just a great opportunity for you to get a good feel for our analytical style if you are brand new. And if you are brand new, get acquainted by going to askSlim.com. Up in the top, free stuff, you'll see that there. Sign up for SIR Lite. That's a stock index report where you're going to get S&P analysis every day for free. YouTube, subscribe to the channel, click the notification bell, and do like this video. Give it a thumbs up. On X, follow it askSlim. And any questions you have, write to Matt at askSlim.com. This is the legal stuff we need to share with you. Basically, you can take a moment and read it. It says what we do is for education and entertainment purposes only, and you should always discuss things with your investment advisors and always look at your own trading plan before making decisions on your trades. Contact information. Well, if you have questions on our website issues, membership issues, upgrades, anything you want to talk about, you can write to team at askSlim.com or Matt at askSlim.com about content, educational analysis, and our one-time specials. So you can just get all the information you need just with these 2 email addresses. Here's today's host. Sadly, Arby could not be with us today, so it's me and Matt and Katie. And as we move forward in here, Katie will take the questions on equities. I'm going to take the questions on commodities, futures, and that we'll get a pretty good coverage of the questions. And anything that you want to learn about us, you can go to askSlim.com about askSlim and meet the team, and you'll be able to see interviews about us and learn about our history, and I think you'll find it interesting. All right, we're going to jump right into questions and comments. I see that there are several coming in there right now, and we're going to cover those. Remember, I'm going to look at the futures. Now, I'm going to do a whole section on the stock market coming up. So I see Molly has a question on VIX. So I'm going to hold off on that because I'm going to bring that shortly. There's questions for me that I see here on natural gas, gold, and silver. So those are the ones that I'm going to bring. And I'm just making some notes here. Katie will make some notes on the stocks that she can bring. And we're just gonna while I'm presenting these futures right now, you could still put up questions you have, and then after that we'll cut it off, and Katie will do the stuff on the equities. All right, so let's jump into the stocks, and let's get this. Not the screen that I want exactly right now. This is the screen I want. And the first question I'm going to answer is on natural gas. Remember, we do multiple time frame analysis that's based on several different aspects or components to the analysis. One of them is cycle or cyclical analysis. And on the bottom here is a drawing tool called Cycle Brackets. And what that cycle bracket does is just give us a guide for the rhythms or the heartbeat of the market. And you can see in here on the natural gas, we call this one harmonic family. and it's this one happens to be broken up into a dominant cycle, a intermediate cycle, and a minor cycle in there. And you can see that when I'm just going to blow this up for you in natural gas, good opportunity to do a little lesson in here. When all three of them are in a corrective phase, as you see right over here, you get the largest declines. That's right here and right here and right in here. So that's follows textbook style of how these cycles work. And yes, where are we right now? All three of them coming down. Now, there's something to really note in here when you look at this, and I'll just look at these last two cycles right in here. And that is that we have strong momentum still right in here. So normally what happens is that when momentum turns negative, and this is our reversal scout, this is a level 4 indicator. When this then turns over, it tells us that the momentum conditions are weakening and you get into a corrective period. You can see in here where it turned down the final month or 2 months in here was on the downside right there. And you can see over here, I have it blocked off, but this was all really negative right there. This is a very strong situation when you look at that. The next thing to consider is translation. So what's translation? It's where the peak comes relative to the whole harmonic family that we have in here. You can see this peak came right in here in this downturn in momentum with a lot of time to go. In this case, there has not been a downturn. What does that mean? It means that this window for a correction right in here is likely only to give you a small one. So that's why there's only a decline to right over here. And I have a note in here. Late February to early March are troughs on the daily chart. So this is pointing right in here to late February, early March as a period for a pullback. This, of course, then because of the powerful upside momentum, this beautiful configuration or translation we have in here, and you can learn about all of that by taking our cycle analysis workshop, and you get a free video if you go up to our top of our website and look in workshops, and you'll see the video that I have there to teach about it. This is an opportunity in here that would give us to buy if it did come down in here. That, remember, probabilistic analysis. I'm putting all of this together, cycle analysis, the configurations, translations, all of the things that tell us this is a very positive condition with momentum, and extrapolating from that and coming out and saying this is a buy zone right in here. If it could pull back under 342, that would be perfect for us if that happened. Of course, when strong markets hold up for a longer period of time, sometimes you don't even get that amount of dip, and the opportunity sometimes is missed, or you have to be more aggressive. So that is the weekly. Here is the daily right in here. And let's look at these cycles right in here, and you could see again beautiful cyclicality. Let me just bring that down right there, where you had the trough right in here. And remember, the troughs are usually a few bars either side of the ideal. This one almost spot on. This one right in here spot on. And this is another example of a very bullish condition. Slim ribbon very bullish right in here, and the slim ribbon PO giving upward resumption signals with those upside arrows there. And that gives you a sign that it's likely to continue going up. So right in here, it's got a little sign of some topping. And if I look at this date right there, that is March 6th. That's when this cycle ends. Going back again to this weekly, I have this pointing out here to late February, early March. That's because of this daily pattern in here. So we don't even know if this top is made yet in here. And I don't have the upside projections in here if it gets above the 437, but it could get, well up in here into the high fours before this does roll over. This is very bullish when you look at that momentum conditions. This is very bullish when you look at those momentum conditions. Everything about this on cycles and everything says if we get that move down into that area around 40, that's going to be a great buying opportunity. That is a lot to ask for getting down to that level over there, because when I look in here, I see support levels that are going to be much higher, and the pullback may be much more shallow, setting up a very, very good buying opportunity. So that was a longer presentation because I wanted to teach around it. Now I'll do some shorter presentations as I look at the gold and the silver market. So I also see a question on there in corn came in. So I think I'll look at corn also. So I had talked about in the gold market, this diamond shape forming in here. It could be a top, it could have been just a consolidation. And you can see in here as it begins to move above the diamond. So this has now been revised based on getting above the diamond. And now you can see again getting above that 78.6%. That's from this peak to this trough and moving up. So this cycle right over here, which this is the silver cycle, this is the gold cycle right there, that is still rising. And you'll notice in here the vector telling us that somewhere in here there's going to be a correction. But because momentum has turned up, it's just giving us an indication of timing that there is some kind of a pullback in here. But then you get into this next rising phase. And, these upside targets in here are the monthly fib extensions, which are 27.96, and this is 29.30 approximately. So those are potential upsides in here. Now, it could be this next cycle that they do that. And, what would that look like? It would look like some kind of a bottom being made in here and then another rally coming during that time frame. So this is definitely an upgrade from what we were looking at just a week ago, because it did break out. Also, we have this formation in here, which is very unusual, where this period of risk essentially gives you a couple-day pullback, and then it begins moving up again. And you could see in here momentum turning positive again. Slim ribbon, there's the green arrow turning that positive. And as it begins to widen, it gets more positive, and the slim ribbon PO level 4 indicator on the bottom in here is green. Look what happened during this period where it was green and all of these momentum resumption signals were coming in as it kept moving up. So a real test of this will be if it gets a little sloppy, pulls back underneath this 25 level here, gives you a green upside arrow and begins moving up. That would be a very bullish thing. But this is a much more positive scenario that we saw, and that period of risk in there giving you almost nothing in this very unusual, pretty much a triangular shape that you see in here, and a lot of buying coming in. Of course, this is certainly about the inauguration coming up, in the sense that people believe that tariffs are coming and will be highly inflationary, also the government needing to borrow tons of money. So that's all got buyers coming into the gold market. /SI, the silver market. This is the market that I said was weaker. Now, I don't really know if this low over here is the trough or this low over here is the trough. And you can see I put in a little shifted cycle in there because I can't really tell. It really looks like, based on the daily chart, that it's got a pullback coming right into here, some kind of a test. They're getting close to these levels, and then after that moving up again. But this is not great right in here. So silver is the weakest of all of the patterns in the metals that we look at, with I think copper and platinum being stronger, but copper is especially strong, and the monthly in copper is very, very strong. So all of that is important to look at. So that's a look at gold, silver, at natural and natural gas. Yeah, and now we're going to look at the corn market. And here, that's gold. Sorry, I want to go to ZC. And here is the corn market. So this market, we have been all over this, saying how strong it was. We've been bullish and bullish and bullish. See this cycle here where the reversal scout turned up. We have a note in there, positive momentum when that happened. and it's been following this very strong translation all the way up in here. Note powerful right-hand translation. The expectation is for some little dip in here and then moving up again. We could see it getting up near $5. Here, looking at these great cycles in here, look at how perfect that they are, telling us that things are positive. Here's the slim ribbon turning positive right here, slim ribbon PO turning green. Look at these upward resumption signals right here, those green arrows. No lie, this is a fantastic way to do the analysis. And when you have those resumption signals, it tells you the upside is coming. This fib extension is 497. This fib extension is 517. And it really makes sense that it's headed up that way. So either, you get some correction now, and this cycle right over here points to a correction into the end of February. This right over here on the weekly is the beginning of February. So you can see that there's a potential that this needs to be extended out towards about the third week. That would be there. If I follow the alignments right here, I'm just going to adjust this slightly. And the reason I move this out to the third week is because this cycle comes out to the third week. There's obviously been no correction in here as the cycle is swamped by this strong upward momentum and no ability to correct. We're just going to look for some correction potentially over the next month and giving a good buying opportunity in the corn market. That's everything that I'm going to look at on the future side. Katie, I'm going to turn this over to you, and you'll handle the equity side of the questions that you have the analysis for. Katie, take it.
Okay, I'm going to look at Tesla first. Someone requested that. So we have, this is the weekly chart. We have a 30-bar weekly cycle. That's the average cycle length. And here was our prior cycle low, a very strong move up to the 200% extension level. And then it backed off into the top of this support zone. You can see that we have a weekly trough. If this was the minor cycle trough, that came quite early, but we do have earnings coming up on January 29th. So there's a possibility that we could see a pullback here or an even further move up. We really don't know. Anything can happen on earnings. So because of that, I have two projections in here. Either we have already seen the prior cycle, the current cycle peak, and we just get a retest of that area and then maybe some sideways chop down into a cycle trough that's due out at the end of May, or we could get a move up, and our next level higher would be around 558.20, the 261.8% extension. And if we were to try to achieve that, I would expect that to be out in the next second minor half cycle. Momentum is still positive with our reversal scout. It is flattening out a little bit, but I think if we continue to move up now, then this will stay green, and we would bias to the long side. If we look over at the daily chart and zoom in here, you can see what has happened. Here we have a dominant 30-bar cycle as well. And we did get below this support zone, but not all the way down to the 78.6% fib. Because we did get slightly below this support zone inside this timing window where we are still, I have only projected back up to the 78.6% fib. We'll have to see if it can get higher than that. Momentum is starting to improve. Today, our slim ribbon has returned to positive. Our reversal scout is still negative, though, so we will have to see how this current daily cycle that we've just begun shapes up. And of course, there's the earnings date, so that will be especially important to watch. The next one that was on our focus list was Pan American Silver, and Slim just covered the silver futures. Here we've got a 19-bar cycle on the weekly chart, and just 2 weeks ago formed that prior cycle low, and this did retrace all the way down to the 78.6% fib. So when that happens, the probabilities suggest that we will not make a higher high than what occurred in the prior cycle. And for that reason, I've just projected up to the top of this resistance zone, which is at 2366, somewhere in that range. And we do have earnings coming up again February 19th, so we'll have to see what happens on there. We do have still got a negative reversal scout, but it is beginning to curl up. So if this starts to move up, then I would anticipate that our reversal scout will turn green, and that will confirm that intermediate low in place and move up into the 23 area. Over on the daily chart, here's that intermediate synced low, and we are just in the bottom of this resistance zone right now. Haven't been able to get up into the top of there. That's where our projection is for this current daily cycle, up at 2260. We do have a daily cycle trough due to 11, so plus and minus a couple days there. So the shape that we would expect to see would be just some further upward sideways chop here. We have a positive reversal scout and a neutral slim ribbon now. If we can continue to move higher, then the slim ribbon would be expected to turn green and then form a basing cycle, which is a positively configured cycle that occurs after one or more negatively configured cycles. This was negatively configured. You can see that it ended lower than where it began. So we would expect this one to shape higher and then further move up out into the subsequent daily cycle. That one ends out in March. The only other one that I'm going to be able to look at is Dell. Somebody did request Moderna, but I don't have updated analysis on that one. Here is Dell. We've got a 33 bar cycle on the weekly chart, and we've already broken below the support zone, so I removed it. The next level down is that 78.6% fib at 99.93. If it wants to get even lower than that, the cycle support would be 86.93 with a low due between April 7th and May 16th. So out in the spring sometime. Over on the daily chart, you can see we have large 51 bar cycles that are broken into minor third cycles. We have just formed what appears to be a dominant and third minor cycle trough right here, but this is not really taking off to the upside. We've still got negative momentum with both the reversal scout and the slim ribbon, and so I have fairly shallow projection here up to the bottom of the resistance zone. That would be 122.34 to 127.18. This cycle ends 321. So that is still not quite inside this weekly cycle timing window. So this one, we would expect rallies to fail and continue to move lower. And I will turn it back over to you, Slim.
Okay, great work on that. Since we only had a couple of questions, I'm going to there were two questions on Bitcoin. Kurt said, can you cover Bitcoin chart? And Ray says, did crypto make a high? So I think what I'll do is just take a moment and take a look at Bitcoin so that we can just make sure we cover everything that people have asked. So this is the Bitcoin chart right over here, and you can see this week has been a powerful upside week. Now, momentum is still coming down in here, and the ideal trough based on the sinking in the January period, in end of January to early February on the daily chart, and I'm going to switch to the daily chart, and that times out over here to late January, early February. This gives me some sense that there's a possibility that the rally that we're in right now is going to fail. So I have a note in here that said, is that the low? The daily analysis suggests it's not. It could be, and it could be that only a test is coming. Either way, you can pretty much say that this area around 90,000 is an important low. It was above the support area that we have over here, and you could see this cycle right in here is translated in a very positive way. So that says to me how your prices in Bitcoin are coming. Where would they project up to? Well, to these fib extensions areas up here, that's about 117. This is about 124 right there on the week. This is brought over from the daily chart. So let's see what the daily chart shows. Yeah. So it's basically the same thing, 117, 124 right there. And the top of that 100% is 131. So once this corrective period is over with right in here, Maybe it's more sideways chop. I'm not sure how it's going to look. The one thing I want to say is that two things. First of all, when you look at this, then it really says that the prospect for much higher prices in Bitcoin are high. In other words, there's still a higher high coming. And that this period that we're in right now is likely to stay sloppy. And then after that, get up to these higher levels. So looking at this weekly chart, if the momentum starts to improve, now you can see on the daily chart, the momentum improved here on, you can see that upside arrow right there on that chart. So the short-term momentum is improving while the weekly momentum, which is more dominant, is still negative. That just warns to me that there could be a chop in here. And consider this. Now, all of this rally that we've gotten all through here has been all about the potential for a strategic Bitcoin reserve. Number one, I think the concept is ridiculous. Number two, I think that we'll find that if nothing happens as far as comments about that, with President Trump doing all kinds of executive actions in this first week and first month, Bitcoin is going to get slammed. I mean, there's going to be a lot of disappointment in there. And then that's the possibility of finishing this cycle as we see it right in here and right out in here. And then, of course, setting up a better period where it can get up into those higher levels out here March and April. So I just think that this next few weeks are likely to be more chopped and potentially dangerous, but ultimately higher highs still coming in Bitcoin and the crypto market. So that's the look at that, and we're going to wrap up this Q&A right now. So thanks for the great questions. Remember that it's for level 1 to 4 members. Matt's going to show you a great way to become a member, and if you do, then you'll be able to get the link to come in and ask questions during this segment. So that wraps us up for the Q&A. Matt, I'm going to turn this over to you so you could talk about level 3, 50% off.
All right, excellent. Great work there, Katie and Slim. So I'm going to share my screen here. You should see the homepage of askSlim. For those of you that are new with us, we are experts at technical analysis when we provide premium membership options with the goal of providing you with professional technical analysis services. We have innovative trade planning tools, and we have comprehensive education for various trading styles, including a separate day trader service. So our membership services range from a level 1 all the way to a level 4 plus the day trader. And how this works is the higher in membership level that you go, the more broader and extensive the technical analysis coverage is in terms of markets, stocks, ETFs, futures, as well as additional access to our charts, custom indicators, and our trade planning tools. So specifically today, as Slim mentioned, we have a special offer with our level 3, which is getting into our top tier 3 and 4 levels. And it is for a 1 month. As Slim mentioned, it's 50% off. It's a level 3 membership for $59.50. It's non-recurring, so you can join and not have to be wondering if it's going to recur. We would expect that you would have an interest in recurring. However, it will automatically cancel. So this is a great opportunity to learn a lot more about askSlim. Just to give you a sense of what we're about, we design our services to optimize your trade planning process. So this means that you're going to have an opportunity to understand the conditions that build a strong foundation for stacking the trade setup odds in your favor. We'll help you identify and learn key elements of technical analysis. So that's style, bias, levels, timing, and signals, all critical components to build a appropriate trading plan. So what I'm going to do next here is just quickly run through a few of these services, not all 10. So there's 10 key level 3 products and services that come with level 3. And today I'm just going to run through a couple of them, and then I'm going to invite whoever wants to come. It'll be on Zoom and on YouTube next week, Tuesday at 12:30 Central Time. I'll also have a recording of it, and I'm going to go through level 3 in detail and talk through all of these services so you can see how you can apply them to the trade planning process. So today I'm just going to cover a couple of them. Specifically, we're going to look at the MCM Pro that we have here. This is our trade planning tool. I'll pull that over right now. You should see it up on my screen. So we call this the MCM. It's a market conditions monitor. What it has is it has an algorithm that is in real time tracking our two most dependable momentum indicators, the reversal scout and the slim ribbon. We have done this at multiple time frames. So as Slim and Arvi and Katie and I talk about, our methodology is built around a multiple time frame analysis, and the MCM has that logic built into it. So you can go right over to, there's two drop downs, and I'm going to focus on the trader type. As I mentioned, a key component to the trade planning process is it's really important to be able to identify what your trading style is. Is the analysis that you're doing, or are you focused on a particular outlook period? Well, with our services, it's very easy to narrow that down. So in the MCM itself, you can pick that trader type you're interested in. Now, with level 3, you don't get down to the intraday detail, but you can look at near term, short term, and intermediate. So if I look at near term here, we have about 140, 145 stocks, ETFs in here. Just awesome coverage of a universe of stocks and ETFs. As you can tell here, there's just really, we have all the symbols you would want to have in a base universe here covered really, really well. They're all alphabetically organized right now, but what you can do, which is super convenient, when you're looking for trade ideas for yourself, or if you want to compare and contrast your own personal analysis, maybe you don't do momentum analysis, you do fundamental analysis or some combination of analysis between fundamental and technical, but you want to see how it compares relative to our momentum analysis, you can click on the trade setup condition here, and you'll be able to find out which symbols are either the most bullish or the most bearish. If I go back to that, and you can also see there's a timestamp. Now it's based on Central Standard, which is my clock here with my PC, but that's also very helpful as you're trying to identify what are what's moving now, what symbols are actively in motion in terms of potential changes, and you can easily see that with our change log and also the trade setup condition, which organizes it as such. So if I come back here, I scroll down and we just look at a few of these here, very bullish ones. You can see the changes that are starting to occur. Like today at 11:30, eBay, very bullish. SMH, very bullish. That means that all of the conditions have come into alignment at multiple time frames. This would have been that eBay was likely triggered as bullish. It could have been a few days ago. So that's a very interesting concept there, is if you were watching something, you can utilize this tool to also notify you when changes are occurring. So for example, let's scroll down here and let's look at something that might be in a slightly bullish condition. You can see how the market is shifting. There's a lot of bullish, at least in the near term right now. So let's look at Slim mentioned corn as an example. And the 2 hour must have pulled back on corn. And now it looks like it might be reversing back into that. Another one here might be Roku or Shop, but let's just say we wanted to look at Shop. And you can click on the notification icon here, which pulls up these the states of the condition. And I could click on bullish or very bullish. And then that is going to get set into my notification app, which you do get an introductory taste of with the level 3. You get up to 5 alerts that you can set. And you can see here that I just set in 2 alerts near term. I want to be notified when Shop goes to bullish or very bullish. So when those conditions happen, I'll get a notification on my desktop that that's happening. There'll be a little sound that goes off, and I'll see that notification. And then typically what I would do is pull up my charts and then compare that to see if I have a trade setup that makes sense. So that's the Market Conditions Monitor Pro. It's a very robust, comprehensive technical analysis trade planning tool when it comes to momentum. The other two that I wanted to show are, go back to the member pages here. I'm going to scroll down and we're going to look at the trade planning hubs that we have. And I'm going to go to the cycle low timing tracker. Obviously, as cycle analysts, time is an important factor in our work. And it's also a differentiator in what we do that is very unique in that we have the ability to project in time, price, and direction. So this is very focused on the time component of our work. And what we have here are essentially 3 different phases or stages of the cycle low timing process. So we always identify when the cycle low timing window. So there's a period of risk that happens And Slim can show this on the charts coming up. And we always talk about this when you have this period of risk where a low is due. And that's where you have high volatility. So if you have a more bullish setup or posture or structure in a stock or ETF or market, typically you'll get a pullback, as Slim was mentioning, with like natural gas. It'll be more short-lived, or the magnitude of the decline will be less. And then what you'll watch for is once we hit that bottom pending. So what this means is that it's inside the period of risk. Then we move into a condition where there's enough positive price action where our algorithm is triggered. And then we move it into the bottom pending category. And then when there's sufficient price action to suggest that a bottom is confirmed, it moves over here. So there's these 3 stages, all very helpful to that trade planning process, helping you with risk reward, with anchors when it comes to maybe stops, and also getting a feel for when you're looking at stronger setups prior to getting in the cycle low timing window. And then as they move into that bottom pending, that could signal that a retest or breakout of a new high could be happening. And you can see right now that there was a lot of symbols in our focus list that have moved through the stages into the bottom confirmed status. And Katie manages this on a daily basis. She's also has a channel on Discord. So it's a great opportunity to learn more about our process, and you can connect with her directly. The last one that I'm going to show is something called most notables. And this is a very important feature that comes with level 3 and obviously level 4. Let me go back to our trade planning hubs. In our indexes and futures hub, there's our category headers for the markets that we cover. And if I click on each one of these, you'll see notes from Slim. And he publishes this usually once or twice a week, or as needed if the markets are really moving. And he gives an overview of what he's seeing in terms of that particular market. Very, very good detail there, really keeping you abreast of the high level information that's important, or any key changes that he's seeing. We also leave a couple of the prior messages that he puts in there just to see the themes as they might be changing or staying consistent. So this is available to you. And then also the last one I wanted to show, I know I said only one more, but I just remembered there was one more I wanted to show, and that is our level 4 chart, or level 4 plus chart requests. So with our level 3 and level 4 memberships, you have access to our highest tier, which is level 4 plus, which we don't really publicize. There's a waiting list for it. Those level 4 plus members get to reach out to our analyst team and request up to 2 symbols per week. But the benefit of the level 3 member, if I go here, is that you get to see these requests. Now, you don't get to make the request, but you get to see the requests that come in. And there's so many interesting ones that these members have. And I just happened to pop in here today as I was preparing for this. And I saw this one on suburban propane, which I thought, let me just check that one out. And Katie and RV prepare these charts, our weekly and our daily cycle analysis. And it's just really an excellent opportunity as you sift through stocks for potential opportunities. This one caught my eye as it's coming up onto this intermediate 78 point, well, there's 70.6 up here, but this prior cycle high, momentum's positive. The shape of this prior one looks interesting. It's just a great way to be able to see what other members might have an interest in and see if that fits your trading style or interest. So that's what I wanted to cover today. Again, this level 3 special is on now. You can take full advantage of it. You have access to everything I'm showing you today, and it's $459.50, half off. It's a tremendous offer. And then next week, Tuesday, I'll even go deeper, and I'll open it up to questions in the audience, and we'll talk through how we can really put this information into practice in terms of trade planning. All right, Slim, back to you.
All right, that's absolutely fantastic. Let's just be really clear that the reason that we do something like this is because we want to be able to give people a taste for what our support for trading really looks like, which is quite extensive. And the fact that we're making this so easy at 50% off, and it's non-recurring. You won't get billed again. And then after that month is over, if you don't, if it's not useful to you, you won't subscribe to anything else, but we're going to send you even a special after this for you to be able to stay on for a longer period of time. So this is just one of the best opportunities, $59.50 for 1 month. Remember, you're going to get well over 600 videos in there that I've produced, great training videos. There's more than 80 tools for text videos in there, and more than 30 videos on trader psychology. So there's so much in there that you're going to get. It's just incredible. So I really want to encourage those people that are watching, never been a member. This is just a fantastic opportunity. Go to the top of the website and click on that level 3 special. Great job, Matt.
Thanks, Slim.
All right, stock market analysis and projections. I know you've all been waiting for this, and that's what we're going to get at right now. Just do read this slide right over here. This talks about our style of analysis and how you use it for your own trading. And of course, the concept of trade ownership. You must own your own trade. This is the market brief. Markets are quite strong right now. Indexes for the week gaining 3 to 4%. The 4% or 4+% is in the mid caps and the Russells. We've talked a lot about that. For the stock market to be able to move up, it's really going to take a lot of buying in that second and third tier of the market, while the rest of the high caps begin to wander. And I think that's what we're really seeing as money begins to come out of that, and investors looking for ways to invest in some stocks that have been passed by. And that's what I think is going on now. We have had the better core CPI this week, which sent the market up huge. It took like 3 minutes for the S&P's pre-market to be up 100 points on that. And we have good bank and tech earnings that are coming out. And we have, of course, the Israel-Hamas deal that has been signed this morning, and all of that is lifting indexes. But the main thing I think that we're getting here on Friday is that buyers are coming in pre-inauguration. I think that they're anticipating that there's going to be aggressive action by President Trump and team. And that is going to be stimulative to the markets. I disagree with that, by the way. And I think that the actions that any tariffs that come, that especially if they're answered by other countries, is going to bring a slowing of the economies. Tariffs are not positive. And if there's a trade war, well, you can go back and look at what happened in 1930 when Smoot-Hawley came out. So tariffs are not bullish. They are probably inflationary at the beginning, but then probably deflationary after that. So we're about to see us come into the first week of the new presidency, and then begin to see how difficult it's going to be to get things done, especially with the potential for Republicans facing off against each other. I think we're going to see a lot of that, and the market's likely to get disappointed. Right now, I'm going to show you what this means. Ghosted cycles are dominating, and that means that the shift that we saw coming at the end of the year and looking at out-of-phase cycles, it's really the original cycles that are dominating. And that's good. It really gets us back in line, and we're getting great guidance out of MDY, the mid cap. So I'm going to show that to you also. So we look at our analysis daily and try to show you probabilistically what the highest odds are. And we change that analysis when the market tells us something different, because we always want to give the highest probability. So there's some changes in here, and you're going to see that. But it doesn't really change the fact that I think the market, which I thought would correct into February in a more intermediate correction, is probably still going to happen. I'll show you that. And really what we're looking at is range trading that's going on, and it's offering hooks for both the bulls and the bears, as the bulls think it's getting ready to go on the upside, and then it just stalls and moves down. And then the bears see it starting to move down, and all of a sudden that stalls and begins to move up again. So we're seeing a lot of that. So that's the brief here. And now we're going to get into the analysis as we look at the stock market. We're going to look at the S&P 500, the NASDAQ, the VIX. There's been a bunch of questions on the VIX. I see another one just came through. We're going to look at the MIDI, the MDY, which is very important to the analysis right now. So important that I put that cycle on all of the other charts for you to see. And then we'll take a look again at the market condition monitor, which Matt just did such a great job illustrating. as he looked at the near term, of the things that are changing. I'm going to look at short term, and we'll see how that all sets up. So let's take a look now as we switch over to the charts. We're going to leave the Bitcoin chart here and switch over to SPX. So I'm looking at multiple time frame analysis here as we're looking at weekly, daily momentum, and the 2-hour chart right over there. Let me get my pointers all up on these right here so we can see what I'm pointing at. And one more right here. So let's start out by looking at the weekly. So this big dominant cycle that you can see right over here troughed right in this area and then began to rally. Now, when the momentum turned over here on the reversal scout, and you can see it, the arrow right there pointing to where that turned over, it sets up a situation where there's a high probability that at least this minor cycle had peaked. Now, the fact that you're getting a big rally over here after getting under the 78.6% right there is really an unusual. That is a lower odds condition that we would see. And if it gets back over that minus 78.6 right there, then we consider that a repaired situation. It hasn't gotten to it yet. The reason that as it gets up here through the 61.8, it has me revising these projections to be a little bit higher. Now, what I've done in here, instead of projecting to some lower levels in here, because I'm not 100% sure where this is going, as far as the depth of the correction, the highest probabilities will get under the 57.74 area, but I want to really illustrate just the direction here of the minor cycle, as you can see. Were it to get up through here, then we're looking at these higher tracks up over there, which are not unreasonable. My high for the year, when you look at the big picture analysis that I did, it was up here at 61.75, much lower than the rest of the street, but that could happen in this cycle right over here. It could happen in the next cycle out over here. So there's this decline over here into February, and then the much bigger decline and much more risk out over here into June. And you can see as we show these downturns in here into that time frame right over there. So for now, momentum is negative in here on the weekly. And then the daily chart is what we want to look at for additional changes. So now we'll switch over here to daily, and you can see on the daily chart that we were looking at the potential at year end. You get a lot of shifting going around. We had a shifted cycle that had bottomed right over here, and here's the original cycle that you see right here. And that is gray because it was ghosted, because we don't really know which of these was the one that was being dominant. Now, this green dash right over here is the mid cap. And again, RV has made the point, I made the point many times, that mid caps, small caps, for the market to be solid, they're going to have to take the lead. And you can see in here this where the mid cap turned up right over here, and I'm going to show you the mid cap chart, that did begin to turn up. And you hear that the reversal scout turns up right over here on the daily chart, and the slim ribbon, which has been negative, is likely to turn neutral, or it may have turned neutral already. So this is the declining phase to that shifted chart. But as you could see, as we get up through the 78.6 and the mid caps driving the upside, it's not likely that this is really the one that makes any sense anymore. It's really the original one that was grayed out right there in line with the mid caps that is driving the upside right in here. And that is a more bullish scenario, and hence the upgrade that we gave it on the weekly chart as it gets up there through the 61.8 and towards the 78.6. This is really the 78.6 there that really follows this track or this track here, which means either a test of this dominant 78.6, that's from this peak to this low, or a test of the high right over here, which would take you out, of course, to that right around 6,100 level right over there. So we have both projections in there to the 78.6 and the 6,100. So some people are going to be watching this and say, well, Slim, you said it's going to come down in here into late January. I did say that. Things are changing. Momentum is changing. It's getting better. And the shifted cycle in here is not in play at the moment. As you can see, I left this in here, but that's really not accurate. And I'm going to remove that from there because these are the dominant forces. Remember, we're looking at money flows, and money is flowing into the mid caps and driving these indexes. So that's very clear to me. When I look at the momentum conditions in here, and that shows you where this is turned blue on the S&P 500. It was negative. It is now neutral. So things are improving. If I look at the 2-hour chart, you can see in here where this 2-hour chart was so choppy. And this is what I meant by the bulls and the bears being very caught in the range trading. And that's what's going on right now. And don't be surprised if there's a failure in here and this comes down again. So you got bullish, you got bearish, you got bullish, you got bearish. This is clearly a whipsaw in here. Normally, this is far more consistent and gives you this very good look at, staying with momentum. We're in a choppy situation right now. And again, there could be disappointment next week when we look at that. So that's a look at the S&P 500. Now we're going to look at the NASDAQ right in here. The NASDAQ is a very similar situation when we look at this. The NASDAQ is getting up through the 50 and getting to the 61.8, and the momentum in here is still negative. So this is a little bit weaker. Again, this cycle in here points to that there is likely a corrective period that will take you out into January or February. So we might get this failure in a test of these lows in here before it goes up. If you get up through the 78.6, then these levels are in play right in here. 22,100 and 22,700 are where those point up to. So you can see in here that what we've done is I'm extrapolating from this negative momentum and from this downturn in here that this cycle in here is likely to give you that minor cycle pullback again. But then when you get into this period in here, these are the cycles that are in play right there and likely to get some higher moves that you see into that period. So just as I showed in the NASDAQ, in the S&P 500, pull back sometime over here, and then another rally potentially to new highs before this major corrective period out over here, which takes you probably into declines into May and June, and maybe some declines that are very significant. I don't have projections in here as to levels yet because it's hard to put that in. All I have is the cycle timing in here, which essentially says that I'm just going to grab this right over here so you could see sometime between this period here in May and this period over here in June is an important trough or bottom. That means there'd be a decline in here. So we're looking for a choppy situation, potential failure in here, move down, another move up out over here, and then a much bigger corrective period as we look out over here into May and June. So the S&P 500 is very much the same thing when we look at that. Here's the daily chart in the NASDAQ. Again, this is looking at that shifted cycle. This is threatening to get through that 78.6. That's the minor one off of this peak. Here's the dominant one. So if it turns out, as we believe, that it's following the ghosted cycle and the mid cap, as you see right here, that is going to give you a lift that's probably going to take you up towards these levels here. That's 21.8 right there on that dominant level on the 78.6. So this big upside move is coming against this big negative momentum. See where the momentum turned negative right over here and this cycle turned down right here? That was just so clear, and that really helped so much. But we have not really had the upturn in here in the reversal scout yet, and we have not turned blue yet here on the NASDAQ. You see the NASDAQ is lagging what we're looking at in there. I want to now go to the mid cap, the MDY. And you can see in here that this mid-cap cycle, the cycles right in here, are really, very important to be looking at. So we see this trough is right over here. As I said, it really is not likely that the low we've seen in the market is going to be the low. It's likely going to get tested. And you see in here, the mid cap is moving up into this resistance area. But at the same time, when we look at the daily chart, you can see in here the upturn and momentum right over here. So the mid cap is really driving. And this is that cycle that I have overlaid on the S&P 500 and the NASDAQ. And that says that it's pretty likely, since we're getting up here through the 50, that we're going to get up here to the 61.8. That's 599. And you notice the higher it goes, the later it goes. It translates to a longer period of time. This is 610 right over here. So this really looks like it's driving the markets to the upside as the small and mid caps take over. And you could see momentum in here has turned neutral. That's looking at the MDY. I see a comment in there from Walter who doesn't like the idea that I'm leaving the Russell out. So we're going to put the Russell in here, and you're going to be able to see that analysis in here. Russell, a little bit different in let me get the 2 hour and the daily. Okay, so the Russell, a little bit different alignments on the cycles, but it's the same story. You could see the rally coming in here too early, getting into resistances, likely to give you this fail out into February, March, and then giving you a period in here where it would be better after that. So the momentum in here in the Russell negative, and you can see in here the momentum in here in the beginning to neutralize on the daily in here gives you this rally. And again, this MDY pushing on the upside right there. So small cap and mid cap going up. And we could see a rally here, 2313, 2349. And momentum still negative in there. It hasn't turned up yet, but the momentum has turned up here in the 2 hour chart as we get up in here with the market condition monitor turning neutral right over there. So things are improving when we look at the Russell there. Now let's take a look at the VIX. I'm just going to switch to this chart right over here. The VIX is in a period, and I'm not going to show the monthly, but I've shown it many times, that it's highly susceptible to big upside moves. Now, if you look here, this looks like somewhere around the end of January, and then another upside tick right over there. This is a period where the VIX could just simply, go to the upside at any time. There could be a decline that sets up a big advance. So let's say that the market continues a decline in the market that sets up a big pop in the VIX. Remember, VIX is essentially a measure of the demand for insurance, the demand for puts, and how much people are willing to pay for puts. This says to me that sometime in a week, let's just call it 4 to 8 days, the rally that we're experiencing right now is likely to end and then begin to move down again as the demand for puts then begins to move up again. So this says that there's probably another week on the upside. Let's just go back to the S&P 500 right over here and see, well, how does that align here? Well, we said another further rally over here and maybe another week, and then it begins to move down in this minor cycle right over there. So that's the period the VIX can begin to move up. So if the VIX says, I don't know, 4 to 8 more days, 4 to 7 more days on the upside, for the stock market, I'm going to believe that, kind of time that out. And that's why I'm showing these downturns in here. And again, what I said about a choppy situation and maybe disappointment after the first week of after the Trump inauguration. So I think we're in for a lot of volatility. You could get a pretty good sizable pullback in here into this period here into this early February, and then again try to move up again. So that's a look at the S&P 500 and everything I'm going to show you in the indexes for right now. But I want to look at the MCM in just a moment. And I think that there's important information in there. I'm going to build on what Matt showed on that earlier in the show. Before I get into the MCM is available to you with this level 3 trial, 50% off non-recurring. Best offer really we ever offer to get all of this level 1, 2, and 3 content. Matt looked at it in detail also, and he's going to do a special on it next week that you'll be able to see everything that's available in it on YouTube and for our members. So Matt can write Matt at askSlim.com if you want to participate in that. And do go to the top of the website and click on that special offer for level 3 right there. Sign up right now for $59.50. We're not going to offer this long, and this is the best way for somebody who has never been an askSlim member to come in. It's non-recurring. You're not going to get charged again unless you want to take advantage of the deal we offer you after that. So great opportunity, and please do sign up for that. So now let's look at the market condition monitor, which is for level 3 and 4 service, and you don't need a special platform. I mean, you just access it through the askSlim website. So I'm going to pull up the market condition monitor right here. Now, Matt showed it to you. This is on the trader style. So Matt was looking at the near term right over here. I'm going to look at the short term right over here. So you can see, and what's been going on is that the short-term conditions in the indexes were negative or neutral. And you can see in here, IWM, which I just showed you, has now become slightly bullish. By the way, we're adding MDY to this list in the next week or so. And the diamonds, remember that the Dow has more of the stocks that would be considered value stocks in it. And so they're outperforming the spiders and the QQQ. And this is really a sign of a rotationary condition that's going in here. And you can see in here, today's the 17th, but on the 15th is where you began to get these upgrades right over here, which is really giving you very, very good information as to things changing. And that's part of why the analysis has been upgraded that we showed looking at the chart. So you can, if you're an intermediate trader, you can see in here that there isn't anything to be really happy about yet. SPY, QQQ still slightly bearish. You have IWM and the diamonds now upgraded to neutral just in the last few days. And, so through the big decline that we had in the SPY and the pullback, you can see in here we went to slightly bearish back in December on the SPY looking at that. So I want to give you just see which are the strongest and the weakest looking at this. There's 130 something of the best stocks you would want to trade in ETFs. So I'm going to go to setup condition right there. And you can see I'm just going to scroll all the way down, and you can see the ones that are in very bullish condition. Take a look at the dates, and you can see where they became very bullish and got upgraded from bullish or from neutral. Not exactly sure where they came from. But those are all very bullish right there. And then you get into the bullish category there. We'll just take a look at everything while they're still green right over here. Slightly bullish right there. So, you can see Qualcomm actually went from bullish to slightly bullish as there are downticks right in there. Same thing for Uber. And those are the ones that are green right over there. That's all the ones that I covered right there. Now let's take a look at the ones that, remember, we're looking at intermediate here, and I'm going to do the same thing for short term in a moment. These are the ones that are very bearish intermediate. Of course, the bond market, believe it or not, NVIDIA is very bearish intermediate. Baidu, Nike, Adobe, Pepsi. Now let's switch over to the short term and give you an idea of how these things are changing and where we are right now. So here's the very bullish ones on the short term. So if you were a trader that wanted to set up like trades over the next few days, you'd be looking at short term and you'd be looking at near term because you want to get those to align. That's what's so good about using this is you do the multiple time frame analysis. So here on the short term, you could see the ones that are very bullish. As you look at that, I'm just giving this all to you right now, and the bullish ones. You really, having this app is really so helpful when you look at that. So these are all bullish right there. Bullish, bullish. I know I'm scrolling fast, but I want to do this kind of in groups so that you can see. Look at how many have turned bullish over this last several days for the short term. Really nice. So many bullish ones in there. That really gives you an idea as to how the market condition has changed to being more positive. It's just, wow, look at all the bullish ones in here. That's crazy. Okay, so now I'm going to switch over to the ones that are in negative condition. And look at that. One is very bearish, Nike. And these are the ones that are bearish right there. That tells you if Nike is very bearish and it has actually had a downtick 3 days ago, that stock is not in good shape when you look at that. These are the ones that are bearish when you look at that. McDonald's bearish, but an uptick from very bearish to bearish. And let's see if there's any Apple. Look at that. Apple is bearish. How do you like that? Well, Apple has not acted well. And Apple's sales in China, they've gone down to number 3 in market share, down 17% in China. And if you think tariffs are going to help that, well, forget about it. And Apple is going to weigh on those indexes most certainly as money comes out of it, and yes, moves into the MDY. So you can see how you can use the market condition monitor to your benefit. I think it's absolutely fabulous. And remember, you can get that by becoming a level 3 member, 50% off non-recurring. That is everything. Welcome back, team.
All right. That was great. Great work, everyone.
Yeah, fantastic.
Great questions from the audience.
All right. Katie, thanks for all the help. Thanks for covering for Arvi today.
Oh, that's no problem at all.
Yeah. All right, that's it. We'll wrap this up and we'll be live again in a couple weeks. And I hope you enjoyed the show. Take care.
Take care, all.